our guests were having issues with technology there. We hope to get back to Mr. Wigu as soon as we're able to resolve the issue. In the meantime, more than 100 global organizations are calling for debt payments of developing countries to be dropped this year. Now, these countries include the world's poorest economies, which are struggling with the impacts of coronavirus. Our major charities, including Oxfam and Action Aid International, are asking for the debt relief, which would free up more than $25 billion this year. They have written to world leaders and major central banks calling for a range of debt relief measures. The call is being spearheaded by UK-based charity Jubilee Debt Campaign and comes a day before a meeting of the G20 group of the world's largest and fastest growing economies. The campaigners want debt payments to be cancelled with immediate effect, including payments to private creditors. The International Monetary Fund has made $50 billion available in emergency financing, while the World Bank has approved a $14 billion response package to the most vulnerable economies. The IMF wants to target the money at countries with weak health systems to help them respond to the epidemic. Meanwhile, the World Bank's funding is aimed at both supporting the health and financial impact of the virus. These will include low-cost loans, grants, and technical assistance. And on the global oil market, prices gained early today as hopes rose that the world's biggest producers of crude will agree to cut output as the coronavirus pandemic crushes demand, even as analysts warn a global recession may be deeper than expected. Brent crude was up by 93 cents at $33.98 a barrel in early trade after falling more than 3% on Monday. U.S. crude was up by 79 cents at $26.87 a barrel, having dropped nearly 8% in the previous session. The world's main oil producers, including Saudi Arabia and Russia, are likely to agree to cut output at a meeting on Thursday, although that would depend on the United States doing its shares. But the threat of a major recession hangs over the market due to the halt of much economic activity as a result of the coronavirus pandemic, with half the global population under some form of lockdown or social distancing measures. And worldwide oil demand has dropped by as much as 30%, or about 30 million barrels per day, coinciding with moves by Saudi Arabia and Russia to flood markets with extra supply after an agreement on withholding output fell apart. Well, that brings us to the commodities market update, and Bolanle Agbaje, one of the research analysts with Financial Derivatives Company, is here to bring us up to speed with that. Good morning, Bolanle. Thank you very much for joining us.
Thank you so much.
How are you coping with this lockdown?
Well, we're following, the government's orders. We've done a lot of research. We're listening to what the world leaders are talking about. The international organizations, they're basically following their path and making sure that social distance is maintained to ease out the spread of this virus. So it's the same thing we're doing, and of course working from home as well.
Well, today you're here with us. Anyway, top on your burning economic issue is the March PMI, which has slipped into a contraction territory. What does that tell us?
So it's obviously not a surprise that we're now in the contractionary territory, and this is obviously because there's been reduced activity in the manufacturing sector, despite the fact that the government has mentioned that there's still the permit for the those that sell food stocks and other necessities to keep functioning, but it will definitely still hamper their business activity. But what this tells us is that as PMI is a leading indicator, it probably means that the growth numbers for Q1 are likely going to be declining, or in the declining region, and that's just because obviously there's no contribution to GDP at the moment. We basically lost most of the period within March, and now it fed into April. There's reduced business activity, and obviously would definitely contribute to slowing GDP numbers.
Now, we have seen both the fiscal and monetary authorities come up with some palliative and stimulus measures. Now, how much impact are these likely to have on April PMI?
Yeah, well, it depends on how these funds are being, distributed within the economy. Like the Ministry of Finance mentioned, they want accountability of the funds that are coming in from the private sector. Obviously, Nigeria were known for, not channeling those funds the proper way. You have definitely some people taking advantage of these funds, but I think the government is maintaining or making sure that there's closer look on what happens within the economy by providing necessities for the poorer end of the spectrum, and make sure that there's no long-term destruction or negative impact on the future of the growth of the economy.
Yeah. Now, so part of the stimulus measure is the distribution of food items
Yeah.
and other essentials. However, we have seen domestic commodity prices spike by about 50% to 100% since the
yes.
lockdown. So what's driving this, and how would you factor these in your inflation
Numbers, yes. So definitely inflation numbers are likely to spike as a result. We've not seen this huge jump in numbers in a few days when it comes to commodity prices, but obviously that's as a result of the panic buying initially, and it takes time for commodity prices to adjust, because obviously there are sunk costs that has to do with businesses. They've changed their prices to these incremental prices in the short period. I think it'll take some time before they actually revert prices to what they were before the panic buying started. And most of these manufacturers are also not clear on how long these measures will take. Some people, by the end of the week, would obviously end the 2-week lockdown period, but we have no clue if the government would actually continue this lockdown period past this 2 weeks. So it's just a wait and see game with commodity price. But the commodities that have been mostly affected are the necessities like yam, sugar, gari, tomatoes as well. Those are the ones that people are stocking up to make sure that they're sorted, and the fact that people are eating more during this lockdown period.
I can imagine that. Right. Okay, let's look at the global oil market. We see OPEC Plus Alliance postponing emergency meeting to later this week. How important is this meeting, and what's going to be the possible outcome if eventually they meet?
This meeting is extremely crucial to even the development within Nigeria. It's a meeting that should have happened, a few weeks ago, right before the pandemic got even to this level. But it's never late than never. Better late than never, basically. But I think the postponement of the meeting actually, or the initial announcement of the emergency meeting, took oil prices to as high as $34 per barrel. And now we're back to $33, very close to $32 per barrel. But we're very skeptical about the outcome of the meeting, considering the fact that I don't know if US is willing to, cut production, despite the fact that, some US oil producers are feeling the heat. Storage capacity is high. I don't know where they're probably going to store most of this oil products in the coming weeks. But Saudi Arabia, we know their stance. They're looking to partner up and, cut production. But with Russia and demanding the fact that US has to join this production cut, it seems far-fetched. But I think it'll be nice to just keep a good look on what happens with the OPEC Plus meeting within the next 2 days, and see what happens to oil prices as a result, because we definitely need it. But we've cushioned ourselves in the fact that we've reduced our benchmark. We've also reduced our oil price, oil production benchmark as well. Oil price and oil production benchmark.
1.7 million barrels per day?
Yeah.
Is that realizable?
Well, it was about 2 points before, but I think they're moving towards the realistic sections. But I don't think it's realizable in the coming weeks. But I think it's something, the fact that it has been dropped, it is a good signal in the right direction. And the fact that, oil prices, the oil price benchmark is currently at about $30 per barrel is a good cushion, considering the fact that we still have leverage or room of about $2 to $3 per barrel.
Okay, now looking at the scenario, while we wait for the OPEC Plus meeting, what is your outlook for oil price in the near to medium term?
In the near to medium term, looking at the worst case scenario, that's a scenario where they don't actually, collude on something. We expect oil prices to continue to trade at about $30 to $32 per barrel. But a likely scenario of them, coming together and cutting output by about 1.5 million barrels per day, that's huge. And obviously that would boost up oil prices, and that would be great for us at the moment because we definitely need it. I know the government has mentioned the fact that they're looking to borrow about $6.9 billion to help with this coronavirus pandemic, and they're looking at international organizations, even though Fitch had already downgraded IDR ratings.
And what's the implications of that?
Yeah, well, obviously when you're with Fitch, they're probably looking at our physical buffers. It's clear that we don't have enough cushion to help, with this increased expenditure, and no money coming in as well. That's, some of the things they're looking at. And it's just a case of there's an increased risk of default. So the question of, calling for debt relief is another angle. Looking at ways that Nigeria can actually buffer themselves at the moment, but it's a weird scenario in the sense that this economic crisis.
If some of these organizations are calling for debt relief, I mean, we've heard also the IMF and World Bank also saying, I mean, some of these poorer countries should actually get debt relief, and then we're still asking for more funding. How do you
coincide that? Well, it's weird times in the sense that the risk of a global recession is happening as a result of a global pandemic, which has never happened in history. The most likely reasons of global recessions are usually from the economic and financial angle. So I'm sure, some of these international organizations already had funding set aside for, unprecedented cases like this. So, asking for the money, I'm sure there are probably some arrangements to make sure that it's not going to hinder, growth within these economies.
All right, now let's look at the global agricultural commodities. We have wheat, we have corn, we have cocoa, and of course sugar.
Yes.
What is their drivers, and what is the outlook for these commodities, in the midst of this COVID-19 outbreak?
With the likes of wheat preferred, obviously, from the numbers that we're seeing, it seems like wheat is probably preferred to corn at the moment, because we're seeing prices of wheat actually increase. And
because of demand.
The demand,
perhaps.
yes. The demand has actually increased, the global demand. But with corn, we're seeing reduced demand in the corn aspect. And with cocoa is definitely, something that is demanded globally. And when you're seeing a reduced activity within the global economic sphere, you obviously see an impact or a negative impact on the prices of cocoa. There's less, although there's increased demand for it, but I think the transportation and shipping of some of these products would definitely affect prices in the long term.
Generally, what's the outlook for domestic commodities
market?
Well,
we definitely would see fluctuations mostly on the high side with commodity prices. Why? Because obviously, like I mentioned, it seems like people are consuming more within their homes. Most people don't have things to do, but definitely on the high side. But I think once this coronavirus pandemic has slowed down a bit, which we're seeing in different parts of the world, we should actually see commodity prices follow suit. So in any case, a pandemic would definitely shoot up prices due to, from the panic buying angle and obviously from the disruptions within the economy.
All right. Thank you very much for your time, Bolanle.
Thank you so much.
Bolanle Agbaje is one of the research analysts with Financial Derivatives Company. When Business Morning returns, we will continue with discussions on the fiscal stimulus by the federal government. Do stay with us.